So yesterday I was sitting on a live and people asked me two questions. Number one, can you explain how you enter your trades? And number two, how do you manage your risk when you trade funded accounts, right? So today we're going to cover that topic in this video. And I'm going to give you guys some insight on how I basically enter the market. I'm going to show you guys a little bit further, a little bit further than the daily time frame. I'm also going to talk about the risk management factor in terms of how everything comes together in terms of the way we do things. I'm also going to give away another $5,000 prop funded accounts that is sponsored by Equity Edge. And don't forget, you can grab 45% of your next Equity Edge purchase simply by using the code ROLIO45 at checkout. And then you can basically start following these trades or the setups as I post them, and you can also follow based on what we're going to be discussing in today's video. Now let's jump straight into it. Right, for this I'm going to share my screen so that you guys can see. Now, as you guys know, I normally do market breakdowns on the daily time frame, and but I never tell you guys on how I enter the market. Now, the way I approach passing an Equity Edge funded account overall is dependent on only two things, and those two things were mentioned in yesterday's video. Those are the risk management factors when it comes to Equity Edge, and number two, the way that I enter my trades into the market. Now we're gonna jump between the Equity Edge and the way I trade in a minute. So we're gonna take the Equity Edge Swift 25k two-step account as a good example, because this is my go-to account that I like to use, either the Swift or the Legacy, although the Legacy is the most popular. But let's use the Legacy for this because, I guess in this case it would make a lot more sense to a lot of people that wants a bigger exposure. So let's say I'm trading a 25k account, which is the one I blew not too long ago. And my maximum daily loss is 5% and my maximum loss is 10%. Now, as a general rule of thumb, when I do take trades, my trades normally consist of, 1 to 3 RR, or it will be 0.5, a 0.5 to 3, it would be 1.5 RR, right? So if you are very clever with math, you would know that this risk was just divided, where we talk about the number one, the risk to reward, where the risk is 1%, the reward is 3%. Here the risk is 0.5 and the reward would be 1.5 because it would be 3 times, right? So the first thing we do is we identify what is our maximum daily loss, or identify how much I'm able to loss for that day. So with Equity Edge, it will be 5% and my maximum loss will be 10%. So I would go over and I would say that, okay, if I have a 5% exposure for the day, I have two options. That means I can take 5 trades at 1% risk, or I can take 10 trades at 0.5% risk, right? So what this basically means is that instead of, when I use a risk calculator, instead of using a 0.05 as a 1%, I'm now using 0.25, or instead of using a 0.50, I'm now using a 0.25, because using a 0.50 would give me 5 trades, which is the 5%. But if I use a 0.25, I would now be risking half of that, and that basically means everything just doubles, right? So when I calculate the risk, let's say 1% of a $25,000 account, which we are going to talk about, which you have to be very careful for also, is let's say 0.10. Now, and that you can only lose a 0.50 for the day because it's 5%. If 0.10 is 1% of your account, that means 0.50 would be 5%. So you can either do 0.10 or you can do 0.05, and that means you will have more opportunity in the market. So the way I look at this, right, depending on the account size that I trade, I would decide what I want the risk to be. So anywhere between a 2.5 up to a 10K, I would do a full 1% risk. 25K up to 100K, I would do a 0.05% risk, half percent risk. Now, keep in mind that this should not be a substitute for financial advice, firstly, because I'm not a financial advisor. I'm telling you guys what my approach is in the market, right? So when I half my risk, I'm now going 20% for maximum loss, and I'm now going 10% for daily loss. Now, you might say it does still stay the same, but remember, if you look at this from a monetary value, then me and you can sit here and we can argue whole day to say that, yeah, but you know that they still stay the same. Remember, the game about being a profitable trader is to ensure that you stay in the game or you stay in the market for as long as you can. Now, you get two types of traders. You get the guy who will deposit 100 Rand and he will be out by 3:30. And you get the guy who will deposit 100 Rand and he will be there for until tomorrow or until Friday based on their risk appetite at the point given. So the first thing I will do is I will identify risk factors. I will then decide what risk I'm going to choose based on the account type. And like I said, anywhere between a 2.5K to 10K, I will use half the risk, a full 1%. From here upwards, I will use a 1%, a half percent, because the monetary value becomes a lot more. And like I said, guys, you can get 45%, okay, on all these accounts. All these accounts are 45% off right now with equity heads. Just use the code ROLEO45 at checkout to grab your 45%. And trust me, now is the best time to get into the market, especially with what I'm going to be sharing with you guys here today. Now that we've done the risk management appetite side, remember, you need to also go and read the FAQs with equity heads, because there is a lot of questions that you need to understand. As for me, I don't have to read those questions because I've already covered a video on that. Now, when it comes to trading in general, and I'm going to remove these EMAs because I do not want to confuse people with what these EMAs do, and we can always talk about that in another video, right? So the way that I enter my trades in the market is also very straightforward. What I do is I follow two things. The first thing I follow is price action, which is the most important thing, right? It's price action, and I follow fundamental data, and with that we obviously look at the structure in the market. Now, we know the market only prints resistance and support, right? This is how this market moves, right? This market moves up, it comes down, it goes up, it comes down, and sometimes it goes the other way, right? Then it comes down, then it goes up again. Now, when we look at two things, we first look at the price action in the market, which is, like I said, the resistance, and you get support, and we determine what the news outcome is. Positive news normally means bullish. The negative news normally means bearish sentiment overall for the market, right? Now, when I do a breakdown, sometimes I am very successful in the breakdowns that I do. Sometimes they are 100% correct. Like the last one that I did, even on the live I was sitting, I was saying that this is definitely a buy, which is exactly what had happened. But sometimes you are right, sometimes you are wrong, because you cannot always be right. Now, whenever you see me do a market breakdown, you might see me say that, okay, I'm expecting the market to continue higher from this level all the way till there. The way I would enter this trade is that I would go on to a lower time frame, like the 4-hour time frame, for instance, and I will apply the same concept that I did on the daily time frame. Now, by this time, if you were a forex trader, the light bulb should have gone on and say, you take the daily and then you do the same on the lower time frame. You follow the price action. And that is exactly what I do. Now, for the daily time frame, I use the daily time frame to establish the overall direction of the market, and then the 4-hour or anything below the 4-hour I use to enter the market. Now, to give you guys a simple example, right? When this instance here, right? So when the market was breaking above this structure, you can see we obviously have all of this is a structure, and let's assume that the market was sitting at this level over here, and we anticipated this move to the upside. I would go into the 4-hour and I would apply the same concept. Like, for instance, to give you an example, we would have seen this range over here that that the market would have traded out of, and we would basically get into the market right there. So once we get the breakout, we apply the buy limit, and then we are on the 4 hour. Right now, the way we would go further is that once there's a breakout, you put your buy limit, you target the previous high as you can see it. The stop loss would then go below the 78.6 of the Fibonacci taken on this breakout that you've seen over there. So we ensure that we put the stop loss anywhere below this level in the market over here. And then from there, you obviously monitor the trade. The way you monitor this trade is that, again, you follow the price action in the market, right? We broke out of that zone. Once the market prints new structure, you would then wait for the market then to break out of that structure. Then you'll move your stop loss. So your stop loss would be moved as, let's assume this is how the market would have gone to your take profit there. And as the market is printing this structure every time, right, this structure, you'd move your stop loss below the structure. And this is how you trail your stop loss to the take profit. Now, remember what I said in the beginning, right? These things, they don't always play out, but it is a much safer way when you trail your stop losses in a situation like this. Now, like I said before, the rules for entry is very straightforward, right? Now, the indicators that you've seen there in the beginning was obviously, ones that we use. We call them momentum indicators in a situation like this. But it's all about the first thing you want to establish, right? You'll see that the price, the market hits off these levels all the time, and this is why they call it price action. But the idea is to follow the same concept from a daily perspective onto a lower time frame. But the most important thing is you need to be able to understand the overall direction of the market. And for that, you can go to my YouTube channel and you can type in there fundamental, and you will see mastering fundamental analysis, how to apply fundamental to technical, all of these things. I have done a lot of videos on this before, but like I said, in order to understand how I enter these trades, it's all based off price action, but understanding the overall direction of the market based on a fundamental perspective, understanding where the market's going to go next. Are we bullish? What is the news saying? And then for that sort of move, we would then go and do that. Like to give you this DXY analysis that I did, right? Okay, that moved to the downside. However, what I would have loved to see was a pullback first, then that move to the downside. Now, like I said, you can go on to even lower time frames, 2 hour, 1 hour, if you want to, depending on your appetite. Some people go on the 1 hour, some people go on the 50-minute, and they would look for that entries in the market. But for me, I'm not a very greedy person. I'm a very disciplined trader. And for me, this year, once again, would have been a nice move to the upside, but I would still be looking for sales at this level because that is just the way I trade, right? So that is how it works, guys. Maybe in the next video, we can talk about the indicators and how they work and how I use them as a further confluences for you guys. But that is basically how I trade into the market. These price action concepts, but my knowledge in terms of fundamental data is more important than understanding structure and price action in the market. Now, let's head over and select 5 winners over here to give away 5 $5,000 accounts. And I'm going to use yesterday's video for that, just so that we can get some winners here, early fresh winners, and that video was done on Minister of German theory that was scamming somebody. There's no reason for today's people to get scammed. Shuagan, you've won yourself $5,000 in a Propfirm account. Your comment is 100% related to the video. My brother, next up we've got, he could never scare me while I'm beautiful. I love this. This guy watched the video, you heard the question. The question was, have you ever been scammed? So beautiful. You've won yourself $5,000 in the Propfirm account. Only DJ code scare me. You've won yourself $5,000 in the Propfirm account. That's 3. I'm starting to love this. I actually feel so good. I've never been scammed, thanks to. Yeah, I feel so good, guys. You know how good I feel now. I've never been scammed. Yeah. Love you. Thank you, guys. Crystal, Hector, guys, you all won yourself $5,000. And I want to say thank you for answering the questions as they were asked to you. Drop me an email. I will issue these accounts to you guys with love out of my chest. That's all I say. Listen to the question, answer the question. And today's question is going to be, you know, what some more question gonna be, do you trade ICT? Some people say ICT stand for I can't trade, but do you trade ICT, or what is your concept? What do you trade? Support and resistance, ICT. Guys, thank you so much for your time, and as always, cheers for years.